What's up, crypto fam? And welcome to a new video on altcoin knowledge, the channel where we discuss everything crypto related and guide you towards greater knowledge. Today we'll be looking at altcoins that might be a scam. Are you excited about this video? Then make sure to leave a like on the video and subscribe to the channel for more informative content. It supports us massively. Before we continue, we want to make sure you know this is not financial advice. So let's get into it. Altcoin scams. With Bitcoin recently hitting an all-time high, the broader cryptocurrency sector received the credibility that it had desperately sought over the past several years. But since Bitcoin appears to be on its way to a six-figure price tag, alternative cryptocurrencies, or altcoins for short, have attracted substantial attention. Thanks to the law of small numbers, it's easier for altcoins to ride Bitcoin euphoria while delivering superior returns. Unfortunately, whenever money is involved, nefarious actors are never far behind. This has led to a rise of fraudulent actions. In particular, you should watch out for these 5 altcoin scams. Altcoin scam number 1. The classic pump and dump, popularized by films such as Boiler Room and The Wolf of Wall Street. The classic pump and dump scheme consistently lures in unsuspecting investors with the promises of quick riches. As is always the case, the scheme ends up enriching the fraudsters, leaving victims with nothing but heartache and a very expensive lesson. These days, securities regulators wised up to many pumps and dumps. Further, the imposed penalties are enough to discourage would-be con artists from attempting such a ruse. But with altcoins, it's far easier for fraudsters to get away with their crimes. Here's how this could work. An individual from a jurisdiction with lax securities laws engineers a frenzy toward an altcoin that they own. Once the price reaches a bubble top, the con artist sells, leaving others holding the bag. The relative anonymity of crypto dealings, along with jurisdictional issues, make prosecution extremely unlikely. Altcoin scam number 2. NFT madness. One of the hottest segments within the broader crypto narrative is the rise of non-fungible tokens, or NFTs. On face value, the NFT represents a natural evolution of the underlying blockchain innovation. First, Bitcoin popularized the idea of peer-to-peer transactions that occur without the centralized authority or intermediary. Later, Ethereum broadened the concept to apply to intermediary-less contracts, such as legal services and real estate deals. With NFTs, the idea is to cement a unique signature to digital works of art through the blockchain. It's a fascinating concept that offers fundamentally useful applications, such as content and product authenticity verification. But you want to be extremely careful putting your money into NFTs without due diligence. For instance, a common scam involves con artists minting or tokenizing artists' work without their permission. Altcoin scam number 3. Ponzi schemes. To some people, all cryptocurrencies might appear as Ponzi schemes. A legendary investor, Warren Buffett, once said, "Cryptos have no value since they don't produce anything. Therefore, crypto investors are speculators, hoping that someone else will pay a higher price for their holdings." As American Institute of Economic Research contributor Joachim Book counters, that doesn't separate cryptos from any other asset class. But a Ponzi scheme is an entirely different matter. According to the Securities and Exchange Commission, a Ponzi scheme is, quote, an investment scam that involves the payment of purported returns to existing investors from funds contributed by new investors, end quote. A classic tell of this fraud is the promise of extremely high returns, such as the disgraced BitConnect's promise of 1% daily compound interest. In other words, if it seems too good to be true, run. Altcoin scam number 4. DeFi swindle. What separates cryptocurrencies from pure speculation on nonsense assets is an underlying blockchain technology. Through this innovation, it's possible to catalyze multiple groundbreaking applications, with centralized finance, or DeFi, being one of the most popular. DeFi generally describes applications that disrupt traditional financial functionalities, specifically involving centralized intermediaries. Under the DeFi umbrella, a burgeoning subsegment is yield farming, a process where a crypto owner stakes their holdings in an enterprise's blockchain application in return for higher yields than what is possible from a traditional banking institution. DeFi is a tricky arena because many good uses come from it. For instance, the innovation allows anybody to be a market maker, i.e., liquidity provider, for the startup crypto exchange. But nefarious actors can also abuse DeFi protocols for the purpose of pure swindling. One of the earlier and most pernicious scams specifically involved altcoins in the initial coin offering, or ICO. Paralleling the initial public offering, or IPO, an ICO works under the same principle. An upstart enterprise seeks capital to expand its business. In return, investors receive some stake in the enterprise. In this case, rather than equity, they get cryptocurrencies. On the surface, an ICO is not inherently good nor bad. It's just another way of accruing capital for a startup, similar to how a special purpose acquisition company, or SPAC, is alternative method to an IPO. Where things go wrong, though, is that the ICO is vulnerable to abuse. Primarily, it's easy for anyone to promote an ICO as it occupies an ambiguous zone within the regulatory structure. Therefore, it's very important for anybody considering an ICO to perform due diligence. Even then, that may not spare you from a clever scheme. How to avoid altcoin scams. The best lies have an element of truth to them. Yes, you can make substantial profits through cryptocurrencies, far more than many traditional asset classes. But it's also true that if you're not careful, you can fall victim to myriad scams in the crypto space. Below are signs that may hint to a possible scam. Spot number 1. The promise of exceptional profits. Statements of extreme profitability are nothing new in the annals of investment fraud, but they're insidious in the virtual currency sector, because in many ways, it's true, people have made life-changing profits through crypto wagers. But no financial platform with any integrity makes any promise of profitability, especially extraordinary ones. If you're seeing too many pictures of Lamborghinis and seductive models, you need to watch out. Spot number 2. No risk, you say? Though cryptocurrencies have legitimately made some investors wildly rich, this is the exception, not the rule. Because of their decentralized nature and lack of extensive oversight, many crypto coins are fly-by-night ventures. Even the most established virtual currencies carry incredible risk. For an entity to suggest otherwise reeks of delusion or fraud. Either way, it's not a great sign. Spot number 3. Wild passive income promises. Through innovations such as the aforementioned DeFi architecture, it's possible for crypto enterprises to not only replicate passive income platforms, but also offer much higher than normal yields. Thus, not every platform offering a 10% annualized yield is a scam. But at some point, you've got to do the math. When you're dealing with 1% daily returns, as was the case with BitConnect, you should question where the money is coming from. If you don't like the answer, or don't get one at all, it's time to put on your running shoes. Spot number 4. Requests for information. If you ever find yourself in a fraudulent situation, the first thing you must do is damage mitigation. Sadly, the fraud may not end with the initial violation, but may translate to further crimes of opportunity. The best thing you can do before you initiate any investment venture is to keep your personal information to yourself. This is crucial when it comes to your crypto private keys and passwords. Never give up such valuable information, as you will not find recourse if you become a victim of a scam. Investigate online altcoin exchanges. Despite the many pitfalls involved with altcoin scams, reputable exchanges exist. As virtual currency adoption becomes mainstream, you will likely see more examples of legitimate platforms. Further, greater scrutiny and standardization should spark greater protections for individual investors. That said, the altcoin world is still the Wild West. Therefore, you should always approach any platform with extreme skepticism. Investigate the target platform inside and out. Also, check out social media posts to see what other users experience. Though you should take any such forums with a grain of salt, they can provide unfiltered commentary that can inspire pointed research. Altcoin regulations. As a groundbreaking and unprecedented asset class, it's no surprise that international laws vary regarding Bitcoin and altcoins. Generally speaking, governing bodies do not consider cryptocurrencies as legal tender, and some countries are much more favorable to cryptos than other nations. International investors will want to pay close attention to taxation laws. How regulatory agencies treat crypto-related transactions can make a huge difference in your total profitability. Well, that's it for today. Let us know in the comments down below what you think of the video and what you would like to see next. Is there a particular coin you would like to see us discuss? Make sure to let us know. Also, like the video and subscribe to the channel so you won't miss out on any of the latest news on altcoins. Thanks for watching, and we'll see you on the next video.